What's going on, everybody? Liam O'Reilly, Vermont economic realtor. Hope you're doing well. Wanted to talk today about Wall Street investors and the large investors that you hear a lot about in the news. I just had a video pop up on my YouTube channel talking about them, and there was a comment on one of my last YouTube videos when I was talking about how the market has shifted. Somebody mentioned large investors and how those those people have come in and purchased single family homes, and they are, have fundamentally kept the supply tight in a lot of these towns. And I wanted to look at some of the data here and dive into it and see what it says. In my opinion, at least when I look at them, when I look at the data, I think that, first of all, nationally speaking, these large investors that own 1,000 or more properties, in the overall housing market, they really only account for around 3% of all single family home purchases, which is important because single family home purchases is what the person who commented on my video cares about. It's what, if you are looking to purchase a residential property to live in, that's really what you care about. I mean, if Wall Street goes up and buys 1,000 apartment complexes, or they're buying up a ton of apartment units across the country, that doesn't affect you as a single family investor directly as far as your home price, or you're not getting beat out by Wall Street. So as far as the single family home purchases as a whole of the market, Wall Street and these large investors that own 1,000 or more properties only make up around 3% of the national market. But the thing is, they're concentrated in certain markets. So let's take a look at some graphs here. So this is a graph of the share of home purchases made by investors. You can see here, this is only for up until Q2 of 2022. So Q3 hasn't come out, and these numbers are going to be way down. I think this sharp decrease that you see on the right is going to be way down, because if you look at the Redfin data here, this is what it says. Investors are pumping the brakes, especially in pandemic boom towns, including Phoenix and Las Vegas, as economic uncertainty and the prospect of falling home prices raise the risk of real estate investing. I would also argue that the rates on some of these treasuries and the Fed funds rate, some of these safer assets are more attractive than real estate for these large investors at this time. Especially, single family homes. So you look at here, down 30%. Now, I don't know if this is, okay, they bought roughly 65,000 homes. I don't know if this is single family homes or all of their properties. But regardless, it shows the trends of what's going on. And when we look at this data here, so this is an interesting chart to look at. This is the share of investor purchases by purchase size. So the red line are your mom and pop investors. Those are people that own 1 to 10 properties. The blue line, and they have different ranges of people. So the green line are people that own 10 to 100. They're the medium-sized investors. The orange line down at the bottom, those are the large investors. They're called the 100 to 1,000 property owners. And then the mega investors are this blue line here. And this is specifically of single family homes. They mentioned that at the top of the article here. Yeah, single family investor activity. So as you can see, the blue line here, which are the mega investors, Wall Street, those big corporations that people are concerned about. I think there's a bill being proposed in Congress to help limit their buying activity. Of all the investors, of all the investor purchases, they're at about 14%. It says it right here. Those with over 1,000 properties represented 14% of all purchases within that category. So a minority among all types of investors. And then 3% of the overall single family home market. But when you look at the different markets, and this is what I mentioned at the beginning of the video, they're very significant. They can be more than their fair share. So now these are charts of the overall single family home purchases by investors. So you can see Atlanta had over 35%, probably around, I don't know, somewhere over 35% of their single family homes were purchased by investors. Of their entire market, around 10%, it looks like a little over 10% were those mega investors. You see on the right. So the legend is on the right. Might not be able to see it because of my head. No, that's okay. You got it there. So over on the right are the mega investors. The legend that shows you the red lines are the mega investors, and Atlanta's the market on the far left that has the largest investors in general, and then the largest mega investors, which is Wall Street, and then Phoenix, Vegas, and these are all markets that we've heard are starting to have issues, that are starting to see their inventory increase, which makes sense. I mean, if you see 10% of your market or more, I mean, I'm sure some of these medium term investors, if investors in general make up 40% of your market and they decline by 30%, I mean, that's a huge portion of your market that is, that's going away. That's not there anymore. So, it really makes sense why we're seeing declines in these towns. Now, bringing it back to Vermont, excuse me, and what I'm seeing here, let's take a look at this data. So Vermont doesn't have Wall Street investors, at least not that I'm aware of. There's not people coming in and purchasing a ton, certainly not in the single family home space. Wall Street is not coming to Vermont and purchasing up neighborhoods, buying a ton of single family homes around Vermont. But and most investors, as far as the investors that I work with, people that are looking to purchase an investment property to rent it out long term will typically lean towards multifamily housing as opposed to single family, because the return tends to be better. The cap rate tends to be a little bit better. A lot of the people that reach out to me for single family homes, at least, I mean, basically everybody who I work with who's looking for a single family home is not an investor. The caveats are people who are looking for a second home, a vacation home that they're going to Airbnb out part of the time. And maybe occasionally you'll get an investor who is looking to purchase a property just to rent it out. But I mean, for the most part, it's just, if you're looking to rent it out long term, not Airbnb, just renting it out long term, you're going to go towards the multifamily space. Now, also, I guess another factor into the single family investors here in Vermont are people who are purchasing the property for their kids. I mean, a lot of people do that with rents being so high, with the housing market being so competitive. The parent who is well qualified, has more money, a lot of the times is coming in and purchasing this property, securing it for their child, and then their child can either refinance after, or they'll keep it as an investment property and their child will pay them rent like a mortgage, that sort of situation. So that happens a lot here. But look at this article by the Vermont Digger, and this is from a little while ago. I believe this is from 2021. Yeah, 2021, written in September of 2022. But this is a chart going over percentage of Vermont homes bought by investors surged in 2021. So if we see this chart here, we look at the left side there, in 20, it was basically non-existent leading up to 2017, and then it started to spike up. Now, in my opinion, a lot of these investors are purchasing as Airbnb, or purchasing, they might be purchasing their second home and are renting it out for part of the year, using it to help offset some of their costs. They don't really define exactly what an investor is, but an investor could be somebody who is purchasing and speculating that the price will go up. That could be, considered a real estate investor. I don't exactly know what they're referring to with these terms, unless they're not talking about single family homes, Vermont homes bought by investors. Um, they must be talking about single family homes. So, at least around here in Chittenden County, there are enough. Yeah, right here. At 3%, it was a no brainer for a lot of investors to buy a second home. They're talking about Bennington. Um, so I'll leave this article in the description for you folks to take a look at. But, in Vermont, the investor market are, multifamily properties, and then people who are looking for a vacation home or looking to Airbnb out their property. And I mentioned this in one of my videos in the past that vacation homes might be in trouble. That's probably the first thing that we're going to see if we do see a downturn here in the housing market, are people selling off their vacation properties, because that's just spare property. It's not the one they live in. They'll be willing to give it up if they hit financial hardship. But anyway, Liam O'Reilly, Vermont Economic Realtor. All my contact information is listed in the description. Leave a comment. Let me know what you think about this video. If you're looking for someone to help you sell or purchase a home here in Vermont, please reach out and leave a comment. Let me know what you think, and I'll see you guys in the next video.